Hi, I'm Patrick Tuttle, the real estate guy with Coldwell Banker Heritage with your real estate market update for the month of December 2022. And we're going to start with our resale homes, and I'll be right back with your report. Okay, so we're back with the report. Resale homes. What's going on in the El Paso market? Well, the brakes have been put on, is what's going on with our resale market. So this is our graph. Pending is in blue, available green, red are the sales, and you see this ever widening gap between the available homes and the sales, as the sales have really started to decline here in Q4 2022. Now, to give you some specifics on it, pending contracts are down 28.4% year over year. Put this into context though. We just got out. Now, 2021 was the best year ever on our record. So the fact that they're 28% down, is it expected? Well, it's a little bit more dramatic than what we expected, but we got to remember that this was the high. This was the pinnacle of our market, and it's hard to sustain that when we've got the money that was as cheap as it was a year ago at 3.5%, 3%. Even some people I know got a 2.25% mortgage. So today, with mortgage rates hovering more around 6, 6.5, even some getting into the 5s, this is not entirely unexpected as the Fed tries to put the brakes on inflation. Sales down 35.1% year over year. Inventory is up 16.1%, but that's not making a huge difference on pricing, and I'll tell you more about that in just a minute. Average price is up 13.1%. Average size of the home is up 2.2% year over year. Now we're at 1,938 square feet, so I'm not doing any predictions on square footage anymore. I said it was going to go down, and maybe over time it will, but the square footage is still hanging in there pretty good. Price per square foot is 12.7% up year over year. That's hanging in with the price overall as to what's going in. And the days on market is 53 compared to 51 last year. Now, I said I was going to tell you about why the prices are continuing to go up. This is a report from Molly Bozel. She's the economist over at CoreLogic. And this is what she states. New listings started to decrease back in July 2022. We saw that here in our market too. This is a nationwide report that she was doing. And she said that it was because as sellers looked at their mortgages, they said, hey, look, we've got these mortgages here at these really low rates. We're locked in. We can stay here. There's no reason for us to sell if we don't have to. So let's hang on to that rate. That's essentially what this report says. We're seeing that in our local market here in El Paso as well. We're seeing that people are saying, you know what, I've got this great rate. I'm going to stick with it. My life change, whatever that may be, I'm going to stick with the house. I'm going to stick with the rate because it's a great rate. My payment is good. I can afford it, so I don't have any real reason to sell the house. And that's the reason why many of the homes have not come on the market that we would have expected to come in. It's what's called the lock-in effect. If you want the full report, give me a call and I'll get it to you. Okay? Now, this is even more interesting is that the average mortgage rate in the U.S. across the nation in the U.S. is right now less than 4%. In fact, it's 3.8%. I wouldn't refinance. I wouldn't sell either. That's a really cheap rate for the majority of people that are out there. So that lock-in effect is going to hang on, and it's going to continue to keep the inventory low in our marketplace for quite some time. And as life changes make the market respond, okay, so what's a life changes? People getting married, people getting divorced, people having children, people passing away, foreclosures, those are the things that drive the market in a regular market. We just came out of this market that was driven by cheap money, and people took advantage of it, and the average mortgage rate across the United States is 3.8%, and it's extremely low, especially when you're comparing it to that 6 or 6.5% mortgage right now. Okay? And this is a chart which shows you what happens seasonally. So we've got this big buildup in listings. This is a nationwide chart as well. And we see this drop off, and this is a 6-year chart which shows you the drop off on listings as we get into quarter 4. And then you start to see them start to rise a little bit over here in January. We're hoping that that's going to happen. It'll give the buyers more choices, and it will not drive the prices up so much. Okay, so that's what's going on with our mortgage, with our local market. And then Black Knight Monthly Mortgage Monitor stated this back in September. He says, after strong growth from May through July, inventory has stalled as sellers balk at accepting lower prices than what they could have gotten if they were on the market, say, 6 months ago. Installing inventory will likely put continued upward pressure on prices and slow the rate of correction in the market. We're seeing this in our marketplace right now as we're not getting the inventory added to the market, and because of that, we've got limited inventory, and that limited inventory is driving the prices continuing to go higher. Okay, now what are the experts forecasting? They're all over the place. This is evidence right here. Realtor.com says that we're going to have a 5.4% increase in sales volume in 2023. HPES says 2.6, the National Association of Realtors 1.2, Mortgage Bankers Association 0.7%, and then we go red with Freddie Mac at 0.2, Fannie Mae at 1.5, and then Zelman says 5.1. But over here, the average, it's a 0.4% increase. Nobody knows exactly what's going to happen, except that in our local market, if we don't get more inventory, the prices are going to continue to rise even with the high interest rates. Now, Barry Habib, the CEO over at the Mortgage Bankers, says this: because we see a slowdown and we see the inflation comparisons start to become more and more favorable, you'll start to see that inflation number move lower. Oh, by the way, the Fed is meeting tomorrow on December the 14th, and we'll see what happens with interest rates. We'll see that inflation number move lower and lower and lower, and as a result, mortgage rates should move similarly on a downward trajectory, probably giving us around a 5% or a below 5% mortgage rate within the next 6 months. Now, if that happens, we're back into the cheap money market, and that's going to drive our low inventory, and it's going to push the prices even higher again. Okay, so that's some extra stuff that we put in there for you. And then Lawrence Yun, who's the chief economist over at the National Association of Realtors, says this: for most parts of the country, home prices are holding steady since available inventory is extremely low. I've been saying this for months, probably a couple of years now, where the inventory hasn't been there, and that's what's driven our price. And then couple that with the cheap money that we had last year, our market just took off and we had that all-time high, and now we're seeing the prices come, well, not the prices come down, we're seeing the sales volume come down because sellers are saying, I got a great rate, I don't need to sell, I don't have a big enough life change to make that happen. And buyers are saying, I'm not going to buy because I'm going to have to pay what they consider to be high interest rates in our mortgage rate right now. Okay, now on to our new homes report. Seeing something similar over there as we've got this, again, widening gap between the available inventory, the green line, and the sales over on the red line. Now, we did see an increase in sales. Pending contracts are down 32.7% year over year, and we've got a 0% change year over year from 165 to 165. I just ran the numbers for last week, and we saw an increase in sales for the week, not for the month. So you'll see that on next month's report. But the months of inventory is up almost 75% in the new homes. Supply chains have gotten straightened out. The builders have got inventory sitting. They're giving out discounts. They're giving out incentives. They're trying to move that inventory as their interest rate continues to rise from the bank, and they want to sell that property before it gets finished so that they don't pay that interim interest too long. So they're offering those incentives out there. Average price is up 18.4% to $302,679. That's a big, big number. Average size of the home is also up 5%. Again, not going to make any predictions on size. Price per square foot, almost 14% up. Days on market is 136 compared to 172 last year. And remember, we had the issue with the VA appraisals last year, and we had the supply chain going on at the same time. Now, on to our appreciation rates for 2022. What you'll see by this chart, this is the FHFA. That's the Federal Housing Finance Agency. and they are the ones that track year-over-year appreciation on same home sales, okay? So this is what a home sold years ago, it sold again, they measure the price difference between the two. This chart goes through September 30, 2022, and what you see over here is that we've so far had 8.9% appreciation in 2022. Now this is what it looks like on the cumulative level, because back in 2015, that was the last time we had a negative number, and then we had 5.6, 1.4, 3.2, 0, 7.2, 11.2, 19, and 11.8 so far this year as we got into the Q4 of 2022. So we've got huge appreciation. If you bought a house in January, you've got somewhere around 9 to 12% appreciation so far this year, depending on where you are. Don't use that as a number that says, hey, my house is worth more than this. That's the market in general as to what's going on. We've had a 145% increase since 2002. That's this 20-year level that we see back here, and you can just see that cumulative price increase. Now, for our neighbors up to the north in Las Cruces, so far this year, they've had 15.1% appreciation, which is a really, really big number. And then that's what it looks like on the cumulative level. And they've had a 120% increase since 2002. Okay, so the markets are doing great here in El Paso, despite the fact that the interest rates are high. The stock market, how are we comparing to that? Well, the stock market's starting to turn around a little bit. The last month, we've had positive numbers. The last 3 months, we've had positive numbers as well. So look at it, the Dow Jones by itself, 5.6% in the last month, 9.7% over the last 3 months. But on the year to date, we're still negative at 4.81%. So compare that 11 or 12 or 15 if you're up in Las Cruces appreciation rate. The real estate market is still doing better than the stock market, especially because we didn't have the decrease like the stock market did. Current mortgage rates, 30-year fixed, 6.175 with an APR of 6.276. Yours is going to vary depending on what your debt to income ratio is and what part of the country you are in as well. Mortgage rate trends, this is showing about the same thing, 6.411% there on December the 9th on the 5-year ARM. 30-year fixed is the blue one at 6.276 over there. The median home prices, we dipped down below the 240 mark. This is all homes. This is resale homes and new homes. This comes from the Texas A&M Real Estate Center. And then that just shows you our El Paso median home prices there, which again is putting in right around the 247, 248 range. Months of inventory remains low. Overall, we're at about 2.25, 2.3 months of inventory. Again, that's with new homes and resale homes together. If we separate that out and we look at what's going on with the market, we're at about 6.5 to 7 months of inventory on the new home side and about 1.5 months of inventory on the resale homes side. So we've got lots of homes out there. And unemployment, this is the thing that I'm the most excited about, because for years and years I've been talking about job growth here in El Paso. In the last 2 weeks, I've seen that we've got at least 500 new jobs. There's a restaurant in the east side, something 33, Bubba 33 or something like that. 200 people they're putting to work. That's incredible. It's fantastic. Yes, they are service industry jobs, but that's putting people to work. And then there's a company moving in from Los Angeles that makes those pads that go underneath your chicken and your steak. 130 jobs over in East El Paso. Fantastic. So our unemployment rates are continuing to go down. We're at about 4.25%, 4.5% here in El Paso right now. And that's what it looks like with that spike that we had back during the COVID. 3 key takeaways about this month's report. Number 1, market has slowed, but it has not stopped. The brakes were put on, but remember, we were speeding down the highway at, say, 120 miles an hour, and when we pulled the brakes, we backed off, and we're probably at about 60, maybe 55 miles an hour right now. Feels like we stopped, but we didn't. It slowed down a lot. Number 2, most of the market remains a seller's market, and that's due to the low inventory. This is obviously on the resale side because we've got a lot of inventory on the new home side. And certain price ranges are starting to get some saturation, and that's when we're getting above $300,000 and we start to see fewer of those buyers out there in the marketplace. Number 3, interest rates have leveled off and even took a half-point drop in the past couple of weeks. We did see some high fives a couple of weeks ago. We're sitting at 6.27 today, and that's fantastic for our market. So that's our market overview for December. This says November. That's because we're using the data from November, but it's December the 13th, 2022, and that is your real estate market report for this month. And we'd love to be able to serve you in any way that we can. And if we can, please give me a call. 915-588-1850 is my cell number. Whether you're buying, you're selling, you need property management, or commercial, we can serve your needs. Thanks again. God bless you. Merry Christmas, and make it a great day. Bye-bye.